Hello and welcome back to Slot Leader episode number 26. Today's episode is about gold. Not the gold that you trade on the usual exchange, but the gold that's available in a tokenized form in Cardano. Our guest today is Patrick Tobler, and he's been working on a solution that lets you buy gold in a tokenized form on Cardano blockchain. Tom and I have been discussing this quite a while, and we're quite excited to have him on the show. How are you guys? How are you doing, Tom? I know you've been in the consensus. You just returned. Any good news or any themes you want to discuss before we go into the interview?
Oh yeah, yeah. In fact, that's right. I was in Hong Kong for a consensus just a week ago, and was a great experience. Hong Kong is a beautiful city. The people are beautiful and amazing. The food is, of course, amazing. Um, the event, there was probably not a whole lot that I heard that was new on the Web3 front. We're talking about a lot of the same themes that we're all kind of aware of, the tokenization of everything, the challenges in the markets, Web3 redefining itself as institutional players come in. But a big topic for consensus was agentic AI and also robotics, and the idea of AI agents as actually being the optimal customers for blockchain. And I know we're going to talk about that on some other podcasts, so we don't want to go into it too big today, but that was definitely where most of the thought leadership was coming in. So it's really interesting to see more and more this convergence of AI and blockchain, because I've had conversations in the past with people who are very into AI who don't understand the importance of blockchain to AI, and they don't see easily how the two work together, but that day is coming. It's fast approaching. That was the
Yeah,
main.
it's quite fascinating to explore this topic of intersection of AI with blockchain, and we're definitely gonna have guests. Not one actually, I have two lined up to talk about this intersection, which is quite fascinating, as I said. But today, we are talking about bringing value into the Cardano ecosystem, and one of those ways is to bring real world assets. When I found out about the tokenized gold in a Patrick Tobler's from NMKR, this is his project. I was quite excited and wanted to know like how this whole system works. And I think Cardano definitely needs something like this, and many blockchains do, because there are the regimes in the market where you don't want to be holding a Cardano, but you don't necessarily want to leave the the blockchain rails and go into the TradFi. And this is especially true for people in the emerging markets. They may not have quite a high confidence in their banking rails or whatnot. I know from my experience working in the field in the emerging markets with the World Bank that a lot of these banks are not quite I wouldn't say reputable, but I would say there's not a whole lot of confidence in actually having your money or using it, or not being able to use it while you keep your money there. So keeping something like gold on chain, custodied in a jurisdiction that has a very high degree of fidelity, and making sure that the chain works really well in a jurisdiction that actually is known for security, it is actually a great way of delivering value to the people out there that want to be exposed to gold.
Yeah, yeah, absolutely. And I'm really excited about our discussion with Patrick, because Patrick and his team got funding from Project Catalyst to do this project with gold. And I think it was a really, really good choice by the community because of what it enabled. So from my perspective, why this is really important is he and the partners that he's working with have now proved out a tokenization use case on Cardano that can be replicated many, many times over. And they've provided a path to do this, and they have experience in having done it. And I can tell you at Apex, we've been getting requests from people all around the world for tokenizing different real world assets. And when these different organizations or individuals come to us, they just really don't know where to get started. Like, we're early enough that there's not obvious on-ramps for these types of projects. So we're talking to one group about tokenization of water out of the UAE to sort of track water consumption. There's different tokenization projects about mining rights, and people are just showing up not having the background in the technology to have any understanding about where to go. So they're just kind of like looking around saying, hey, can you help with this? So Patrick and the folks that he's worked with have actually created a path that can be replicated in several different ways. It could be really, really amazing for Cardano and open up a whole world of RWAs on Cardano.
I don't know about you, Tom, but I definitely signed up for it when I came to this ecosystem, 5+ years ago. I think blockchain has such a tremendous potential, and that we have sort of neglected it in the past few years in favor of quick sort of solutions that might have their own utility. Like, I'm talking about memes and whatnot, but I think it's just like buying a plane in order to have a free peanut kind of situation. Like the technology and the architecture of a solid blockchain can gobble up a huge chunks of economy and sustain it and make it streamlined and make it cheap to interact. But we haven't gone in that direction. But the fact that this thing is happening in Cardano, and you guys have Apex Fusion is spearheading some of the other use cases, is just makes me happy, because this is where the actual utility, the actual value comes from. By slashing the cost or streamlining some process that requires enormous amount of coordination, human resources, and maybe even capital to basically build out. I think the challenges here, and we'll go into the interview, of course, is how you deal with the underlying current architecture that supports, let's say, you talked about tokenizing the rights, right? Currently, the gold rights in the mining sector. Currently, all these things are legally wrapped in an LLC. The way it would work is that you have an LLC that has rights to this, and then you go through a security, sort of path where you have a small group of investors, and they have basically buy these rights, and then you cannot. These rights are illiquid. There's no market for them. And if you want to sell them, good luck finding another guy, even though they might be valued at, a good, at a good rate or whatnot. But the fact that, all of that is going to be digitized, hopefully, creates so many marketing opportunities and trading opportunities, and just makes the world economy more robust, just tapping into the value and unlocking value that was dormant before, and subject to stringent rules and not being available to the wider public. So imagine the number of the effect that these kind of these kind of tokens will have on the global economy. Once you have it digitized, you can move it, you could trade it. You could leverage it. It's quite unbelievable. But the challenges, again, remain on the legal side. I think these are something that blockchain cannot solve on its own, but it can influence the path that the legislation will take. Namely in Dubai, for instance, to make sure that the the link between the assets on the ground and the digitized token basically remained robust, and one would basically have high confidence that this token actually represents the real world assets. In the case of, I don't want to spoil the thing for everybody. In the case of gold with NMKR, I think is the name of the thing.
Right.
There is a direct redemption, and that creates an economic value. In the case of mining mining gold, I think the redemption would have to be on the market. So if you have a really close ties between the token and the asset in the ground, and you have a well-functioning market, then you have a product.
Yeah, yeah, absolutely. And you mentioned about some of these use cases that haven't materialized yet. It makes a lot of sense because there is quite a lot of complexity baked into some of these legacy systems that require a lot of detailed coordination. And that coordination requires understanding and buy-in from all the various parties. So it would make sense that it would be easier to launch a meme coin, right, than it would to completely change existing legacy structure. Like I like the example of insurance and healthcare. So there's so many great use cases there, but think about all the different players and all the incentives of the different players. And to, first of all, have the technology in a place that can actually support a complete change of that process and that infrastructure, but then having people in each of those organizations, decision makers who understand like why it would be beneficial and be willing to take a chance on that innovation. That's really the part that is needed right now. And I think that's the sea change that we're starting to see. And we've talked about this before on the podcast, where you just need some change makers that are embedded deeply in these different organizations and industries to start to connect with Web3, where the technology is getting to a place where it can actually support those things and getting to that level of maturity, right? So it is something that's coming as people are waking up to it more and more. But we knew from like folks on my team who work together at Input Output in the commercial team. This was the challenge. We had people come to us all the time with great ideas, but unless you had solid partnerships that crossed across all the different personas involved in the solution, and also had an ability to address the legal and regulatory concerns, it was going to be a very heavy lift, right? So those things have to come online.
Yeah, definitely. I think
Oh, you're on mute there.
Definitely. I think the push will have to come from the incumbents themselves, in my opinion. But it does require a little bit of of due diligence from them. It didn't help that the United States, at least, sort of portrayed blockchain as a villain, or the chain of where the criminal activity takes place. All of these have been debunked. All of these claims, fear-mongering, have been debunked a long time ago. But a vast majority of economic agents, and by that I mean companies and whoever is producing economic output, they just don't have enough capacity to think about the details. They just want to get a clue from the regulator or whoever is in charge that going in that direction or the other direction is safe. I think we are approaching that time horizon right now with all these different bills being in consideration, and some of them have passed. So there will be a market clarity, and once the United States decides to go in one direction or the other, the world, like it or not, follows. But what I like about your particular project, the water or the mining or whatnot in Dubai in particular, is the fact that smaller countries with good right leadership, they move fast. They move extremely fast. There's not a whole lot of going back and forth. There's not a whole lot of incumbents that you need to appease or make sure that they are taken care of and things like that. So once you realize the potential of a technology, whether it's being cost cutting or creating new markets, by extension tax revenue, that's how I would sell it. You can actually move faster. But all of this and more can be discussed and will be discussed with our guest that's coming up next, Patrick Tobler. I hope you stay tuned and let us know in the comments below if you have any questions or anything that you wanted me to cover and I didn't cover, or you would like me to cover later on. Hello, everyone, and welcome back to Slot Leader. Today's guest is Patrick Tobler. I think in certain circles, Patrick is an OG and hasn't been doesn't need any introductions. But I would like to welcome Patrick to our Slot Leader podcast and let him introduce himself.
Yeah, thank you so much for having me. Honestly, we talked about this before. It feels really strange being in this because people call me an OG, but I'm not really an OG. You are the OG, Umed. So it's really cool being a part of Slot Leader after so many years of it pausing and me watching it when I came into Cardano in the early days. And yeah, just about myself, I studied computer science. And then straight from university, I went to build a project on Cardano, which is called NMKR, which is an NFT minting platform and has done a lot of transactions and a lot of NFTs on Cardano. I think like 25% of all the tokens on Cardano were minted with NMKR. And right now, really, we're focused on a few more different directions because the NFT market obviously is not doing super well. So we decided to go a little bit more into real world assets, but also mostly into AI now. And I'm sure we will talk about all that. But yeah, that's basically it. Oh, and I'm German. I live in Switzerland. Yeah.
Tom?
Yeah, welcome, Patrick.
Thank you.
I've followed your work for many years in the Cardano ecosystem, and it's great to be together on this call again and hear more about what you're doing these days. So great to be talking to you today.
Good to see you again.
Yeah.
Yes, Patrick. So with regards to your projects, let's just dive into this new thing that you've been working on, which is digitizing gold and I believe silver also. Is that correct? Mm-hmm. Tell us how this project came to be and why did you choose to build on Cardano and basically make this product available to the wider market? Is there a lot of demand?
So for sure. I mean, the main reason why it even started is because we realized that it doesn't really matter if you're minting an NFT or if you're minting, digital gold or tokenizing a real world asset. Behind the scenes, it's all the same. It's all Cardano native assets. So the technology is the same. And I always was pushing for these like real world kind of use cases, not just having a million like ape profile picture projects and stuff like that, but actual NFTs and tokens with use cases. And I think real world assets are one of the most obvious ones because you just make everything better by bringing them on chain. You give them a whole ecosystem to live in. If I have digital gold, I can sell it in like 1 second, which I can't do if I have it physically in my house. And I can lend it, and I can use DeFi, and I can do so many really cool things with it. So, so it's a very obvious use case, and it kind of happened that not only us as NMKR were interested in this topic, but also 2 other companies in Cardano, Fluid Tokens and IMX. Fluid Tokens is a lending protocol, and IMX is like a compliance company. So we said, okay, let's team up, let's do this together. We all bring, our stuff to the table, and we are gonna try this. And we started with tokenizing some diamonds and some granite in India actually, and we tokenized some wheat in Argentina. So very exotic kind of stuff as well. But then the gold was the really big one, I would say, which we only recently did. And And I think the demand is definitely there. We see a lot of trading volume at the moment. It's like, I don't know, 50K a day or so, which is pretty good. It's not incredible, but it's pretty good for a bootstrapped kind of project with low liquidity. And it's I think it's a very safe harbor. You know, if I wanted to exit out of Cardano, at least temporarily, I would not buy dollars because, you know, the dollar just keeps going down. Why would I buy dollars? It's the worst investment I can make. So I would rather exit out into gold, and we're giving people this opportunity, and then they can just hold it in their Cardano wallet and they can swap, you know, whenever they want to. So I think it's a really important kind of piece of DeFi.
That's amazing. And I'd like to dig a little bit deeper, Patrick, to the project. So first of all, aside from the technology, who did you partner with to tokenize the gold? Is this gold that's held in reserve? Is this gold in the ground? What are the relationships behind the project?
So it's all gold held in a reserve. We partnered with a company called Pro Aurum, which is Germany's largest gold seller. So they are gigantic. You know, like we are, I don't know, 0.001% of their volume or something like that. So so it's a huge company, and what you're essentially buying by buying the tokenized gold is you're buying a coupon to redeem the gold from Pro Aurum. So at any point you can go to any of their stores and you can come and say, okay, look, I have these tokens and I want to have my physical gold, and they're just going to give it to you. So it really works, and we actually tested that recently because we brought the gold to a centralized exchange called NBX. It's the Norwegian exchange, and the CEO of NBX actually flew to Germany to try it out, go to one of those Pro Aurum, stores, and get his gold and claim it. And it completely worked. Obviously, we told them beforehand that we're going to do that, and it probably makes sense to send them an email or send us an email before, because not everyone working at these stores has ever heard of Cardano. But it does work, and that's really the promise of it, because you can just get it at any point, and you can also have it shipped to you at any point.
Well, that's amazing, and I definitely applaud the effort to bring the external value from TradFi into the blockchain, because I think, as you said, it's important to have these avenues of exiting Cardano if, you know, temporarily, if you have a view about it, or if you have a view that gold will outperform the crypto, which it did, you know, in a past, you know, couple of years. So whoever's been a gold bug, or Peter Schiff is probably laughing if he's watching this podcast. But it's good to have these kind of avenues of building bridges between the traditional finance and crypto. And this podcast has always been about that, to be honest, to bridge the gap. Because I think the promise of blockchain goes well beyond whatever is digitized on it. And, you know, projects like these are extremely important in bringing not only legitimacy, but also more conservative money into these ecosystems. And now, naturally, you have to rely, you know, as you described, the chain of custody and all that, you have to rely on TradFi rails to make sure that the token that you are issuing is backed by a reputable organization in a reputable jurisdiction. This carries a lot of weight, and but it also offers a lot of flexibility, because you don't have to haul around the pieces of gold. You know, I think it's just amazing that this kind of product exists on Cardano. And do you think there will be? I've seen a couple of pairs with gold on some exchanges. Do you think this is gonna have a wider adoption on the exchanges? And you know, we see in crypto, we see Bitcoin having this ubiquitous position. Any pair is available, or most of the pairs are available against Bitcoin. Do you think a gold becoming one of these pairs, like in the ecosystem?
I think so. I mean, I really think that one of the core issues of Cardano right now is that the volume is very low, right? The DEX volume specifically. And the main reason for that is that we only have ecosystem projects in there. So the top, 20 projects are all like, ecosystem projects that kind of grow with Cardano and also shrink with Cardano. And gold is very unique because it's completely decoupled from Cardano. And that makes it nice because you can always rely on it, like the price going back up and going back down without whatever happens in the crypto ecosystem. So there's always at least an arbitrage opportunity there, which already creates volume. And this will be there even if ADA is at 1 cent. It doesn't matter. So hopefully this helps bringing up the volume, and then people see, okay, the people that actually provide liquidity to this pair are making money and are not losing anything because it's actually a relatively stable pair, having gold and USDM in our case, or hopefully soon USDCX when it comes to Cardano. And then I expect it to rise, the liquidity to rise, and because of that also the volume to rise. And I actually think it's a very low-hanging fruit for Cardano to bring up the volume, to just bring more real-world assets as quickly as possible, because then, like, we will fix this whole DeFi issue and we will have a lot less reliance on the ADA price. And you can see this even with new tokens like Midnight. Like if you look at Midnight, the main thing that differentiates Midnight in DeFi at the moment from all the other tokens on Cardano is that it's not coupled to ADA. All the tokens have the majority of their liquidity in an ADA pair, and Midnight has it in a USDC pair because it's mostly traded on the exchanges and on Binance chain and stuff like that, right? So because of that, if ADA goes down, Midnight doesn't necessarily go down, which is very important. So we need more of these kind of assets on chain that just are decoupled from ADA.
Right. So in line with that, Patrick, we hear a lot these days on the news and in the media about this concept of the tokenization of everything, right? And we're definitely seeing that buzz all around. How similar or different is the tokenization of gold to other real world assets? Do you see this as something that what you've done can easily be rolled out in many other markets?
I would love to say yes, but the reality is no. It's extremely difficult. Like the hurdles we had to go through to get this gold tokenized were extremely high. We're a small startup. If you want to play a role in this whole real world asset kind of game, like the serious assets, especially like the securities, and when we're talking about tokenizing stocks and ETFs and stuff like that, you have to have like 15 million in funding to even be considered a tiny player, like a really tiny player. We did it with like basically nothing. Like, yes, we got a catalyst proposal for it, but essentially all the money went down for lawyers and stuff like that. So because of that, it's almost impossible for small startups to just go into this game and make it successful. It's easier when you're tokenizing stuff like collectibles and things like that, like Pokemon cards and so on, because they are not classified as financial assets, so you can do that pretty easily. And it's also nice, but I mean the golden grail is tokenizing stocks and other things, and there right now the players are not crypto startups. The players are BlackRock and all the like big banks in the world and so on. So I'm a bit pessimistic about it, sadly. And then also, every country is different. Like we specifically focused on MiCA and on Europe and all that stuff. But if you want to sell in the US, it's very different. And if you want to, tokenize something in, I don't know, India, it's completely different. So it is a crazy endeavor.
Yeah, and no, this basically brings me back to my old days as a banker. Every jurisdiction has its own quirks when it comes to financial assets and how each sector is regulated. We've seen some really good news coming out of Avalanche. They've tokenized some housing titles in New Jersey. They've tokenized some titles of car titles in California. But I would say in all these cases, the initiatives should come will have to come from the incumbents. It's not like, a small startup comes and says, oh, we're going to disrupt everything, just like Uber did, right? With the taxi industry. It's a little bit more difficult. So the incentives there, I think, in my view, is that running, maintaining, and, all that infrastructure, or the back end office or the middle office that is involved or in recording these transactions is going to be cheaper. So it would make for the incumbents to basically change the rails. And I think it's coming. It's just we need to do a lot of educational work among the entrenched sort of interests to basically tell them that if for nothing else, you can cut your costs down to pretty much zero. I mean, in the case of titles, I can say that, title search, for instance, becomes so easy. You don't have to pay $2,000. I've bought many houses, sold many houses. I don't have to pay $2,000 in order to do a title search to make sure it's clean. If it's on chain, you will see it like with a click of a button. And that kind of creates a little bit of I would say, pushback, because these industries, they rely on these fees in order to exist. The lawyers probably will have to have other revenue streams in order to make a living, I guess. But that's the cost of progress. But the savings get passed down to whoever is transacting, so that's great. But yes, so this idea of bringing external value into the Cardano is a very important one. But do you think that we haven't had a lot of volume in exchanges, indexes? The fact that we haven't had these, and again, this is an open question, has to do with how fast or how slow, I would say, the dexes are in Cardano. The 20-second break at a minimum, or not at an average, I would say, between the transactions, basically, things could move fast, and if you're doing arbitrage and things like that, things could get out of whack really fast. And I don't know if the chain congestion is still an issue. Do you think those are the factor or play a role when developers think about developing markets, like gold or silver or anything else?
Honestly, I don't think so. I think it makes a little bit of a difference. Yes, like faster is always better, sure. And you can do a lot more like quick trading if it's faster. But there's also a lot of volume on Ethereum, and that's even slower than Cardano. And so I do think that the main reason why we have low volume is because we don't have good assets, and because we didn't have a stablecoin at the beginning. Every ADA pair, or every pair, is coupled with ADA because there was no stablecoin at the beginning. Now it's different. Now we have USDM, USDA, soon USDCX, and so on. But the existing pairs are still there, and they're all coupled to ADA, which is a big problem. And even Tab Tools doesn't even show USDM yet. It's not really in the mindset of these DEXs and so on yet to really push USDM pairs or any like stablecoin pairs. And I don't understand why. I'm not in the business of running a DEX, but I really think that should be the top priority for all of them, to just push stablecoins as much as possible. I think we are seeing faster DEXs now. We're seeing Delta DeFi, which is doing a Hydra DEX where you can do millions of transactions in like a minute or less. I think just probably 10 seconds or something. I don't know. And then we, in general, don't have congestion anymore. And Cardano is pretty fast nowadays, I would say, in most cases. So the 20 seconds is really the average. So I think this part will sort itself out. Like, I'm not worried about the technology of Cardano. I think it's built in a very good way for these kinds of use cases.
Yes, there's one thing. The one thing that Cardano has, and I dare say other probably ecosystems don't, is the community. And I think if you get the community behind the idea that gold becomes like a stable sort of store of value for whoever wants to transact in it in Cardano, and adopt it as such, then we would probably have a huge success here, and that could eclipse anything else. I think Cardano community is by far the most prevalent in the industry, and I have to take my hats off to Charles Hoskinson, who's actually built this community through his videos and educational series and whatnot. So, but this question has always puzzled me about why there isn't enough volume and what we can do in order to bring it into on chain. But it's good to see. How has the growth been since you launched? Of course, the growth, from zero is going to be pretty high.
Yeah. No, I mean the gold growth is very slow. Like what we've done is we launched it over a year ago, and no one really cared back then. And maybe it was also a bad time to launch it. I don't know. Or maybe we didn't do a good job with the user experience on the platform, that kind of stuff. But now what we've done this year, or what I've done recently, and why it's a topic again, is I said, okay, look, we have this amazing asset here, and no one is using it, and it's kind of stupid no one is using it. And for NMKR, we have a bunch of money sitting around in dollars to pay employees and so on. So let's just take a part of our treasury and put it into gold. We're not losing anything because gold is pretty stable, more stable than the dollar, I guess. And then we just open this pair and bootstrap it a little bit. And I think a lot of people like that. And it shows that, I 100% trust this asset. I know it's legit. I know I can get my my gold physically if I want to. Not that I want to have 100K of gold like in my house or something, but it's a good way of doing it, to just show the community what's possible. And I hope that a lot more projects just see this and say, okay, we are also going to put a bunch of our treasury into gold. The main problem with that is that no project has a treasury, because all the projects are chronically underfunded. And
Yes.
yeah, but that's a different topic. So
that is a different topic. Yes.
Yeah.
I have a lot of opinion about Cardano treasury, but we'll keep that for another time.
I don't even mean the main Cardano treasury. I mean just the projects themselves.
Yeah, I mean they're basically the extension of Cardano treasury, because they get paid in Cardano anyway.
True, actually.
So is ADA. Anyway, Tom, do you have any other questions?
I do. We should probably move on to the AI discussion, but I do have a couple quick questions, hopefully, to round this out. So I'm thinking, first of all, that your customer, right, you mentioned that they started tokenizing a small percentage of their overall holdings of gold, and they could potentially add more. First question is, would it benefit, or do you think they would be interested in moving their Cardano native asset to other parts of the blockchain space that have more liquidity? Would there be benefit in that? And then a second question, which is not quite related to the first question, is you mentioned NMKR partnered with Fluid and X. I'm curious to know the contributions of each of the different partners to the implementation.
Then let me start with the second part of the question. So Fluid Tokens is a lending protocol. So they essentially are kind of the DeFi partner in all of this. They're now accepting lending for the gold on Cardano, which is very nice. Or I think they'll start soon. I think it's not live yet. I'm not sure. And they have built the actual tech and the actual platform. Then NMKR is responsible for the minting. So we are the actual people who are minting the tokens. And then IMX is a compliance partner. So they do KYC and they do the whole legal stuff. And they basically set the whole structure up. And they are the main ones in charge for gold. And they are the ones in contact with Pro Aurum and like doing all the deals and that kind of stuff. And regarding your second question, so the way it works is that we essentially, Pro Aurum is not the ones tokenizing the gold. The ones tokenizing the gold is us. We just buy it from them, and then we basically create those tokenized coupons. So the question, if you want to go to other chains, really is with us. And of course, I know Apex Fusion would be a very good home for gold as well. That's probably where your question is coming from. And there's nothing against this, honestly. You know, the more exposure we have, the better. It doesn't really matter. It just matters where the users are. And one thing to note there is that we are minting the gold on demand. So every single time someone comes to the website and buys gold, we send an order automatically to ProAurum to buy more gold, which is very nice because we can, in theory, just buy, you know, millions or billions of dollars of gold, and you can even sell it on the website as well. So it's like unlimited liquidity. It's just not really. I don't know. I think it hasn't really caught on with the Cardano community yet, but it's essentially billions of liquidity, just not on chain, but it's available.
Well, it's incredible because you've proven this use case in a very efficient way, in a very creative way. And I see a future now where, you know, people like the holder of the gold is going to come and request these types of things for access to markets, right? So
Yes.
you've proven that it can be done in a very scrappy way, which is super cool.
Yeah, very scrappy way. But yeah, I would love to see the F code soon on Apex Fusion. I mean, there's no reason why it wouldn't also work there.
Yeah, well, I think we're all preparing for a massive shift change in the industry. We certainly see it all building up on the regulatory side and with the big players, and we're all waiting for that moment when everybody rushes to get through the door. So people with the technical skill and the background in the industry, you know, weathering all these difficult market challenges, the hope is that it will pay off with real adoption where we all get to benefit together.
Yeah.
So
yeah, I heard the number is $4.5 trillion sitting on the sidelines, somewhere on the X. So
crazy.
So they're all waiting for the clarity. Well, with this, basically, I would like to close this discussion about about the digitized gold. Thank you so much, Patrick, for coming to the show. I really appreciate your insights and wish you the best of luck.
Thank you very much for having me.
Woo! That was a nice interview. What do you think, Tom? Did you get a sense of like things moving in the right direction with Patrick?
yeah, I learned a lot from the discussion with Patrick, and I really like the creativity that he brought to that project. You know, but when I first heard about the project and the partnership, I didn't understand that he used the funds from Catalyst to actually purchase enough gold reserve to demonstrate the use case, which was a really really powerful strategy to showcase what could be done, right? Instead of waiting for a partner to come forward and ask to put the gold on chain, they just took things into their own hands to show that it could be done. And then getting to the point where you can actually get the coupon and the voucher and you can go redeem it anywhere in the world, like that, I think is a really important part because it demonstrates to people that they can easily redeem their assets whenever they want and get physical gold.
Yes, and I think that tie between the token and redeemability of it in the physical realm dictates the price. You know, if I am a market maker and I see that the price of gold is moving and I want to make a quick buck, or at least, you know, or what we call making markets efficient, I have an opportunity to make arbitrage trades right there, and this is a great way for Cardano to actually start accumulating a lot of economic value outside the token itself, and be a platform, a technological platform for such kind of markets. It's a great way to bring value from the outside, as we have discussed, and I think sky's the limit here. You know, that gold is the first thing. There could be other things that will come into the picture.
Yeah, absolutely. It's just another sign to me that, like I like to say, Web3 done right is a perfect storm of opportunity, right? Bringing together open source technology with innovative people who want to drive change and opportunity and funding all in the same place. And it's it's sort of a sign of the direction that the world is heading. This isn't something that you would be able to do in a traditional corporate environment, right? But enabling people to come up with these solutions and try these different things and push the envelope forward globally is really, it's sort of the core theme of Web3 for me. But also, I think it's important in the general direction that the entire world is going more and more, and people connect with this concept because it's clear today, and I don't think anybody can argue that traditional institutions, legacy ways of operating, are really failing to address the ever increasing levels of complexity that we're facing on the planet. And we really have to lean in to opening up for creating environments, creating mechanisms to utilize all the cognitive surplus that we have all over the world. We've got amazing, creative, talented, inventive people who care deeply about their communities and about the state of the world. And the more that we can sort of unlock those latent potentials in our communities globally, it's gonna be the sea change that we need to address this mounting complexity.
Absolutely. And I think, look, Cardano has probably the biggest community in the entire crypto sphere, is in my opinion, or the most vocal and passionate one. And I think there is a case to be made that, you know, when you gather so many people, you know, when you align them up behind a goal, things tend to happen. The reality changes by itself. And you know, I wonder if there is any frameworks you can give me, give the readers and the listeners about how one could potentially think about these kind of like coordinations that seemingly happen out of nothing, but there could be some sort of underlying mechanism or frameworks to analyze them or explain them. I know that you're big into coherence, you know, concepts, and I would like to know if there's anything you could, you know, tell our listeners about that.
Yeah, absolutely. Well, coherence is an emerging science that you can think about from many different angles because it works across scales. And I would say that the Cardano community exhibits very deep levels of coherence. And the way that you know that is that the community is very resilient and that it has come together because it resonates along the lines of a particular vision, right? The vision and the ethos that was expressed about Cardano at its inception attracted people to that project because it just felt different, right?
It did.
Other projects. And what that enables is when you're motivated by that resonance, by that connection, it makes you stick around, not just for self-serving purposes, but because the connection is deeper. And the term that coherent science likes to use is phase locking. So when you have enough coherence, meaning resonance with something else in your environment, you become closer and closer to it. And the more closely you become, you phase lock in. And then in a sense, like you're entangled, right? So we're all familiar with that concept of entanglement. So this concept of coherent science, it applies to technology, it applies specifically to AI. But for me, the best way to explain it is experientially as a person. A person can be said to exhibit high levels of coherence when they have alignment between four different things, right? So when your thoughts, your feelings, your actions, and your energy are all in alignment, meaning they're not fragmented, that makes you a coherent person, right? And you can understand that conceptually, like if you're going after a particular goal in your life, say, and let's say there's something you really want, but your self-talk in your mind is talking you out of it because you have doubts or things like that, or your emotions are talking you out of it because you have fears, right? Or you have doubts from programming that you had in the past. Or let's say you have a lot of belief and even your thinking is right, but you don't take the actions that are required, right? Then you're not acting properly. So if you get those things aligned, then that's said to be living in a state of coherence. And there is an organization that's been around for some time called the Heart Math Institute that's done a lot of research on how to line up coherence by having the mind synchronized with the heart, right? So your thinking and your heart resonating together creates a powerful electromagnetic field that can actually be felt, and it interacts with other electromagnetic fields. So you think we're all moving around. I think that the heart emits a field that's maybe 10 meters in diameter around us. So think about this. You're projecting an electromagnetic field everywhere you go, just based on your presence, right? And you're interacting with other people. And when those fields come in contact, they interact and they influence each other, right? So we've all had that experience where we're having a great day and we're feeling really pumped, and then we interact with somebody in our environment who isn't like on the same level, and if we give them enough of our attention, it can bring your energy down. That's the energetic fields modulating and coming to a balanced state. If you give that person the attention, they're going to leave that conversation feeling a lot better because they're going to be siphoning off some of the energy that you're producing. So these fields are all interacting all the time, right? So that's why when you go to, let's say, a Cardano event,
Yes.
People are excited to see each other.
Yes.
Like you look forward to it like all year. And then you see people you maybe haven't seen in 6 months. And it feels like, wow, this is just like a family reunion getting back together again, right? That's coherence in action. And it's people coming together with sort of a similar resonance, similar interests, similar ethos, and kind of sharing that part together is what coherence is about on a human level.
That is so amazing. When you were describing this, in my mind, I went back to, I think it was 2022, the Cardano summit in Wyoming. I felt it. I really felt that, there's this huge energy that permeates the entire space and goes beyond that, and that we're part of something bigger than ourselves in that regard, and in that environment, I think it feels impossible, and you could make connections, talk to people and come up with ideas and implement them, and since everybody's on the same page, so to speak, there's not a whole lot of coordination that needs to take place that would otherwise have to take place, because we're all know a lot of things, that the underlying sort of platform is already being prepared for something to take effect. So all you have to do is just agree on the top part, and the bottom is already taken care of. We know that we're part of Cardano, and we want the Cardano to succeed, and we want X, Y, and Z, and everything is just like aligned. So, and but kind of to counter that, I wanted to pick your brain about it. In the crypto community, the naysayers basically say that Cardano is a cult. So my question to you is the cult coherent? Like, if there was a cult.
That's amazing. So, okay. So let's take it back just a little bit to frame for that topic. So first of all, the technology itself, while amazing, is really an enabler, right? What this is really about is people. And I mean, fundamentally, really when you think about it, so all the people who come to the Cardano event, they've all got hopes and dreams and visions for the future. They've all got amazing things that they want to bring to the world. They're genuinely good, kind people, very intelligent people.
Emphasis on genuine, yes.
Yes, genuine and authentic, right? They're not solely motivated by money. This is what I mean by having a resonance. Of course, we all want to profit. Of course, we all want to mutually benefit, but that's not the prime driver. We're not going to do it at the expense of other people. This is what is powerful about the Cardano community, in my view. So what does the technology enable? What does an event enable? The event, the technology, is basically the stake in the ground, the signpost that says, hey, everybody, come together around this and mingle. This is your excuse to get together and bring yourselves together in one place, right? The technology itself is not really the thing. It's about creating an environment and enabling the mechanism that enables people to bring these energies together, right? It's the standard bearer that people come to, right? So the Cardano technology and the mindset and the ethos was the thing that attracted all of these people, because you're not going to get that same environment at a corporate networking event. You're not going to get that same environment at a sporting event or at the mall. You have to have a reason for people to come together, right? And this is what it's about. And that's why, people will talk about it as a cult, because there is an energy signature to it, right? And when you see the deep levels of commitment, what people are committed to is the vision and that feeling of, in this place, anything is possible. In this place, I can bring my biggest dreams, and I'm going to have other people around me that are coming forward and are excited about this thing because they see it in the way that I do. So if you want to call that a cult, that's fine. Like, you can call it that. Why would we call it a cult? We would call it a cult because there's not anything else like it in the world. We don't know how to frame it. It's not a toxic environment like a cult. There's not anybody who's trying to extract value. It's not like we're attracting a community so that we can somehow abuse them, right? In a decentralized environment, every actor has its own part to play, has its own power, has its own sovereignty in coming to that environment. And I think it can be a challenge because, the Cardano community, or any community, is not standalone. It's affected by larger macroeconomic forces, larger global forces that we also have to contend with, right? So when the money's not flowing, when the market's down, when the sentiment is down, it tests that resonance, and it can be very, very challenging. But the thing that's really cool is that the force of the community is so strong that people just keep coming back over and over and over. And you don't see that in other blockchains that don't have that same resilience.
That's a good test of the authenticity, I think, because if you were in it for money, and I've seen it with other chains, unfortunately, that have maybe a little bit better technology than Cardano in certain cases, but the fact that they don't have the community, they don't have such a resonance with the mission of the chain. You see people coming in saying, when the price is down, everybody's at fault, and they start basically blaming everybody, even though, in my opinion, markets move the way they move. They are the closest thing to reality we see, and Cardano is unique in the sense that, to me, I have moved away a little bit from Cardano because I wanted to expand my horizons, but I also came across Apex Fusion, and it kind of reignited my passion for the technology. I think the good people who've built the Cardano, who wanted to, Cardano to succeed and carry that energetic signature, have transferred into an Apex Fusion, and that kind of gives me a lot of excitement about this chain. Of course, it's all the same family, because it's interoperable and all that, and Cardano is going to be the first chain that I fell in love with. But also, when Cardano had difficulties, my passion just reignited for that too, because I remember the fork perpetuated by a nefarious actor that got everybody together, and we basically solved the problem by switching to a node version that actually didn't have these issues, and it just goes to show how powerful community is, and how lucky we are in Cardano ecosystem and the surrounding areas to have that kind of, support, wide support from the wide variety of people around the globe.
Yeah, that's right. And that's the reason why the community is resilient. The reason why people were able to come together in a coherent way and solve that problem so quickly is because they genuinely care.
Yes.
Right.
That's amazing. And I think with that, we could close this episode on that high note that, community, no matter what, is going to be the number one determinant of the success of a project. I truly believe in this. It doesn't matter how much money you have. Doesn't matter what kind of VCs are backing you up. If you do not have the mind share of a community or the support from a wider community, the resilience goes away. And with that, no matter how powerful your technology is, you may not survive. That's my personal opinion. You see it with Dodge, but anyway.
Yeah, amen.
Thank you guys for tuning in, and I hope you like this episode. And I will look forward to we look forward to seeing you again next time.